You know, when the stock market is flying high, it's easy to feel like a genius, right? But what about when the bottom completely falls out? Well, that's when legends are really made. So today, we're going to crack open the playbook of the ultimate market legend, Warren Buffett, and find out his core strategies for finding treasure when everyone else is running for the hills. No, really, think about it for a second. The headlines are screaming bloody murder, all you see is red on the screen, and your retirement account is shrinking by the hour. What's that feeling deep in your gut telling you to do? For almost everyone, it's some version of get out now. And this slide just captures the whole thing perfectly. On the left, you've got the total emotional chaos of the market. And on the right, you've got Warren Buffett, just looking calm as ever. See, while most of us see a crisis, he sees a massive once-in-a-decade sale. And that, right there, is the heart of bottom fishing. It's not about perfectly timing the lowest point. It's about having the clarity to buy amazing things when they're cheap, simply because everyone else is terrified. Right. So how on earth does he pull this off? Well, it all starts right here, with the number one most important strategy. You have to master your own mind. Buffett's most powerful tool isn't some super complicated spreadsheet or algorithm. Nope, it's his temperament. You want to know what was going through his head during the 1973 market crash? This quote says it all. While the rest of the world was in full-blown panic mode, Buffett was actually excited. He saw all that fear as the ultimate buy signal. It's just a completely different way of looking at the world. Okay, let's really unpack this. The emotional investor sees the price tanking and hits the sell button. The Buffett investor leans in and asks, okay, but is the company still valuable? The emotional investor just follows the herd, right off a cliff. The Buffett investor calmly turns around and walks the other way. And here's the kicker. He's not trying to catch the exact bottom. He knows that's a fool's game. He's got his eyes on the long-term prize. And really, everything boils down to this one powerful idea. Price? That's just the number flickering on the screen. It's what people are willing to pay at this exact moment. But value? That's the real underlying worth of the actual business. Understanding that difference, truly getting it, is the key that unlocks his entire strategy. All right, so let's say you've got the mindset down. You're feeling cool, calm, and collected. You're ready to be greedy when others are fearful. But greedy for what? What are you actually supposed to be buying? This brings us to part 2 of the playbook, knowing how to spot a fantastic business that's just temporarily on the discount rack. For this, Buffett has this super simple but incredibly powerful 4-point checklist. First up, do you actually get what the business does? If you can't explain it simply, move on. Second, are people still going to need this stuff in 10 or 20 years? Third, is the management team smart, honest, and focused on shareholders? And only if you can say a big yes to all 3 of those, do you even bother with the last step? Is the price a total bargain? And this all leads to the holy grail of Buffett's world, intrinsic value. See, he's not just guessing here. He's doing the tough work to figure out what a business is truly worth based on all the cash it's probably going to make for the rest of its life. He says to think of it like you're buying a whole farm. You don't value it based on 1 year's crop, right? No, you value it based on all the harvests it will ever produce. That's intrinsic value. So what do these fortress businesses actually look like on the inside? Well, for starters, they are absolute cash machines. They crank out way more cash than they burn through. They're run by great managers who know what to do with that cash. They don't have a mountain of debt dragging them down. And most importantly, they have what Buffett famously calls a moat, some kind of durable competitive advantage, like a killer brand or secret tech that keeps the competition at bay. Okay, mindset? Check. Homework? Check. Now for the really, really hard part. Actually pulling the trigger when every fiber of your being is telling you to run and hide. To act in the middle of a crisis, Buffett says you basically need 2 weapons in your arsenal, and they're priceless. You've got to have them. It's cash and courage. You can't buy a single thing if you don't have the cash ready to go. And you'll never, ever pull the trigger, no matter how cheap things get, if you don't have the courage to stand apart from the crowd. I mean, let's just go back to 2008 for a second. Picture it. The entire financial system was on the brink of collapse. Seriously. Lehman Brothers was gone, panic was absolutely everywhere, and what was Warren Buffett doing while everyone else was running for the exits? He was writing checks, huge ones, billions of dollars into giants like Goldman Sachs and General Electric. Not because he knew when the crisis would end, but because he knew these were solid businesses that would absolutely survive and thrive on the other side. But what if you buy and it just keeps dropping? I mean, that's the fear that paralyzes everyone, right? Buffett's view on this is crystal clear. If you bought a great company at a great price based on its long-term value, who cares if the stock drops another 10 or 20%? In his mind, that's just noise. It's a paper loss. It's not real until you hit the sell button. You're focused on the value you got, not the price on the screen. All right, let's wrap this up. What's the big takeaway here? Because the amazing thing about this whole strategy is that it's pretty simple. But simple doesn't mean easy. Not by a long shot. So if you remember nothing else, remember these 3 things. Number 1, get your head straight. Your own emotions are your biggest enemy, period. Number 2, do your homework when things are boring and calm so you know a bargain when you see one in the middle of a panic. And number 3, be prepared. Have that cash ready, have that courage stored up, and be ready to act when opportunity knocks. And this, honestly, might be the most important part. Everyone gets this wrong. They think bottom fishing is about having some crystal ball to predict the absolute rock bottom price. It's not. For Buffett, it's just about getting the chance to buy a wonderful business at a price he thinks is fair, or even better, cheap. If it gets even cheaper after he buys, great. That might just be a chance to buy more. So I'm going to leave you with this one question to think about. Because look, the market will panic again. It's just what it does. So when that day comes, with all this in your back pocket, what are you going to see? Will you see a crisis? Or will you see what Warren Buffett sees, one of the greatest opportunities you'll ever get to build your future wealth?